Good morning, everyone. We start with a session on basics of investing in stock markets. One fact which I want to share with you is when I was having this COVID problem, I was going through some of the materials and then I joined some of them. And then I realized that there's a good marketing which is happening. The knowledge is only little, but the marketing is too much. And they charge so much that they actually not honest. And then I realized that what is the objective of our living is not to keep on holding money, but to start sharing. So I decided the very last year that I will start with this basics, fundamentals, technicals, a little bit of mind management, mutual funds, so that people should know what they are investing, why they are investing, what is the thinking behind it. So this is my second version of the course. We are going to see about the investing myths, the thinking behind it, the assumptions, some of the components of investing and trading, the income types, why there is a rush to the stock markets, 45% increase in the retailers. How do we prepare for market openings? Factors which are affecting the markets when we look at the particular market on a day-to-day basis. We'll see some of the charts of last 2 years of some sectors. Then reading section, I am going to show you some important notes from Rich Dad Poor Dad, which is going to come up in this lecture. And one of the article or the YouTube you can have a look is the top 10 pens of 2022 by Ruchir Sharma. And on the disclaimer once again, everyone is able to see the screen and read also and hear me out clearly. Yes?
Yes, yes.
Yeah, thanks. This is just for education purpose. I'm not a SEBI registered advisor. I am just giving you knowledge. I will tell you what is good, what is buy, what you want to buy. You buy at your levels. You find out from your financial experts and take your right decisions. The objective of me doing this course is to spread the knowledge of finance. Some of the myths which we know is that investing stocks are for rich people only. Start with small amount, build up. Markets is gambling. It is very risky. I don't think so. Don't go by speculation. Don't go by various advices. Even if I give you an advice, think and then appropriately enter, or you may not enter. Decide what values you want to enter. Decide how much you want to enter. If you don't have the skills or you don't have the money, at least try to learn the things. Educate yourselves. Someday these things will become very useful. All modules will be covering. Okay, it will go from 3 to 4 months time. Follow the process and profits will happen by itself. You should be a process driven person and not by speculation. In a market, five possibilities are there. There is a very big loss, there is a small loss, there is a break even, there is a small gain, and there is a big gain. We should be worried about only one thing, that I should not undergo any big loss. The remaining four possibilities are okay with us. Big loss is the thing which should not happen. You must have read some article recently on the first week of January that so many brokers, because of the new option rules, have undergone losses in crores of rupees or lakhs of rupees. Now, what is the reason? It is not because SEBI law was wrong. SEBI had put this law right in September, October. But there are people who are very greedy. Some person has taken 42 lots of Hindalco. What do you expect? 42 lots and one lot of 1,000 shares, 1,000 plus. You are going to make profits when you are knowing that there is going to be a particular new kind of rule which is going to be followed, and then you crib that there is a possible problem है, पैसा नहीं है, इतना करोड़ों का loss हो गया. It is you who invite this kind of problems. If you make small loss and out of 5 or 10 trades, 1 or 2 trade or 3 trades can go in a loss, overall you will make a portfolio gain. So avoid this big losses. Don't go by speculation and यहाँ की बात वहाँ की बात सुनाई दिया, ये ले लिया वो ले लिया. Go by fundamentals. If you stick to fundamentals and then look at technicals, you are not going to be in trouble. When I'm talking of fundamentals, I'm talking of look at the economy, look at the sector, look at the stock. Go by this way. This is called a top-down approach. When you go by the stock, go by the fundamental parameters of the stocks. What do you mean by fundamentals? We'll see that in detail. What is the P? What is the PB? What is the earnings? What is the net profit margins? What is the EPS? These are the things which we look at. When we look at the technicals, is the stock momentum? When we look at valuations, what is the valuation? P, PB ratios, EBITDA, EV to EBITDA. When we look at the technicals, momentum kisme hai? When we talk of earnings, we look at the current quarter earnings, like just now the quarter results are there. Go back and look one quarter back. Go back and look the second quarter back. And then see the last 2 or 3 quarters are doing well. So if we know the 4 parameters, which is the fundamentals are good, then we look at the valuations, not very expensive or expensive. If you're looking for growth stocks, you will have to buy expensive ones. Then you look at the technicals, that is the momentum is bearish hai ke bullish hai ke neutral hai. And one more thing is the current quarter. The quarter results are coming out. Look at those stocks which you are having doubts. Wait for the results and then go for it. Don't go by the sellers. Tips which you keep getting. I get so many tips. I find it many of these from the biggest of the houses. They are telling you something which is going to happen. Go by technical analysis, when to add, when to buy, the demand zone levels, when to sell, what level, how much partial booking you should do, what is the average you can do. Down size पे average करना है या upward moving पे average करना है. When to exit. Profit bookings is a must. Even if somebody is advising you, you verify it yourself. Verify it yourself and then take the right decisions. This training material I will be sharing on the YouTube. You can have a look at later on also. Just go through it once again if you want to. Diversification is important, but over diversification is also not so important, not so right. Right? Stock selection skills should be important. Have 2 portfolios, a major core portfolio and a minor satellite portfolio. Major core portfolio, have the good stocks with you. The minor satellite portfolio, keep playing with swing, positional buys, or sometimes if you want to do intraday. Please remember Nitin Kamath, the owner of Zerodha, mentioned in the first week of Jan, 1% of the traders are making profits less, not even 1% are making profits more than FD returns. That was a statement. Means if you are getting only 7-8% by doing trading, it is as well you don't do it. People lose money because sometimes they earn money much faster than they get, and then they start thinking that markets are very easy and I want immediate results. And many times we go into revenge buying. एक में फेल हुआ तो दूसरा फेल हुआ, तीसरा फेल हुआ तो मैं रिवेंज लेते लेते मैं ज्यादा मनी खो जाऊंगा. I will be losing more. You should have patience. I have learned one thing from the markets in my life is patience रखना पड़ेगा, education लेना पड़ेगा, practice करना पड़ेगा, and following the process is the discipline you will have to inculcate in yourself. How much to buy, what quantity to buy, will tell you about position sizing, risk management, maximum in a sector about 30% of your portfolio, maximum in a stock 8 to 10%. How much risk per trade? If I have portfolio of 1 lakh, risk per trade I may take about 2%, 2000 or something. If there is a fear in the market, when the market goes down, people start selling. Don't get excited, worried. बेचना मत चालू कर दो. Greed is another problem. When the things are going up, we think of buying, buying, and buying further buying. Look at the markets, how much it has gone up. It has gone up by 24%. Look at the volumes. Is the price increasing with the volume? If the price is increasing but the volume is not increasing, it is a sure shot that that stock is going to come down. All these things are very much important, and mind management psychology plays a very important part. Have clarity, decide your stocks, and then be after them. Better to put money in FDs or mutual funds or in equities. We'll see that in inflation. Gold में रखना है, real estate में रखना है. We'll see that. We'll study them as asset allocation. How much should I invest in asset classes? We'll see them as we do as part of asset allocation. We'll study for different age groups also. Financial plan is what you should be having. You should have a proper vision and goals for yourself and your family. Don't keep on procrastinating. Compounding effect is one of the most important thing. If you want to have a peaceful life, you should have this particular thing on your side. 20%, 20 years or 30 years of proper investing will help this. You need to have it. Everyone has a lot of challenges: family, education of children, wedding, holiday, vacation. If you allow yourself to invest properly, then you won't have to work till the last day of your life. And you will not have to be dependent on your children. They have their own requirements, own worries, own problems, own goals. Your retirement planning is very important. If you are invested in the right stocks, you will definitely gain. And one important thing, your earnings should be from multiple sources. COVID has taught every one of us a lesson. Passive and leverage income should be also one of your ways of monitoring and owning. What are some of the critical components of trading and investing? We'll see some of them. I'm just listing it now. Investing, before that, you should know how it is done. What do you want? You should know yourself, your goals. What is your business plan? Consider stock market investing as a business. Don't think ek liya ek becha ek liya becha. Agar if you are going to buy a house, how much work you will do before buying a house? You'll spend 3 months. So same way, I'm not telling you to spend 3 months, but at least spend a week, a few days before you invest in a good amount in a stock. Fundamental analysis, stock selection criteria is important for buying a particular stock. Filtering is important because unless you filter the stocks, you may end up buying something which may not be the best one. Asset allocation is important: how much to buy, what equity to buy, what mutual funds to buy, whether to invest in gold, whether to real estate में invest करना है. We'll see that. Technical analysis using price action charts, oscillators, indicators, volumes, price volume. Portfolio create करना important है और उसको rebalance and recrunching your portfolio is important. You should be knowing how to master the tools. We are saying trading view, we saw it today. Risk management, risk reward ratio is important. How much to buy, position sizing, allocation is important. Mind management, psychology of individual is very important. If you are able to control yourself 40 to 50% of the times, you will be a winner. You should know how to use the different decision tools. You should have a trading plan and a journal. Where you have been successful, log it. Where you have been failure, log it and learn from your mistakes. Now we'll see something called as types of income. Income is what we earn when we are doing some work. That is your wages, your salaries, your commissions. An individual physically has to be part of the income process because he is putting in effort and he is earning from that. We work for 8 hours a day, 40 days, 40 hours a week. So we earn and we earn something. It is a simple linear income. The day you stop earning, you will not get your money. 90% of the people in the world, they have only linear income. 90% of the people in the world have only linear income. These are employee, we are working somewhere. Sometimes we have our own business. You are a trader, you are a consultant, you are a doctor also. Passive income is coming from something like you write a book, you get royalty, you get dividends on your stocks, you get interest on your FDs. You are earning from different source of incomes, multiple source of income. You have a rental property, you are kept on rent, okay, FDs, etc. Leverage income, people borrow money, especially new companies, they borrow money and they finance the assets and they start startups most of the time. Okay, companies raise debt to invest in their business operations. Leverage is in the stock markets. People invest 25% of the money and the remaining 75% is coming from the brokers. So the market allows them to pay less. Instead of putting the full money, you pay part of it, margin trading and all. It allows a stock trader to get a bigger, larger position. And when the things go bad, they end up into trouble also. So you have to be aware of the other side also. Multimedia businesses, futures and options, franchisee businesses, margin money trading, etc. All are this kind of businesses. Large investor, like the big people who invest in companies, they invest their residual income and create full-time income from multiple sources. Mr. Junjunwala, Mr. Damani, and all the big investors, their incomes comes from this way. They invest in multiple areas, multiple companies. They don't have to worry about one company. If they have invested in 4 or 5 companies, even if 2 or 3 does well, they have made the money. They generate wealth. Okay, and that becomes their building blocks for the future incomes. A story which is going around is Mr. Junjunwala invested some 30 lakhs and then that became into now so many thousand crores rupees. So a large successful investor operates on the money, on the model that your money should work for you rather than you working for money. Most of the middle class and poor people, we work for our money. Today, at the age of 62, I realized that I should have been doing these things 20 years back. But then we are in our own life, in our own businesses. But many a times we realize at some point of time that if we don't do it now, then that opportunity will be lost. It sounds easy, but it is not that easy. You need to do a lot of hard work to generate this kind of income streams. That effort is required, but many people are not willing to put that effort. That is the problem. The fifth income comes from the jackpots, the inheritance which we have from our family sources. This is something which you are lucky. Some people get it, some people don't get it. You are not able to hear me? You able to hear me? Hello?